tempted to convert their existing fixed deposits and move them to fixed deposits with higher interest rates. So if somebody has an existing fixed deposit at, let's say, 6.5%, and you see that the fixed deposits are now available at, let's say, 7.25% in banks, so you're tempted to move by breaking your existing fixed deposit. But you got to understand a few points before you do that, and what's the thumb rule before you really take a decision whether it's really worthy of breaking your fixed deposits and moving it into a higher interest rate fixed deposits. Point number one, let's take a very simple example. Let's take an example of a fixed deposit which you did around, let's say, 9 months back or 10 months back, and that time the fixed deposit slabs for banks were like, if you do it for 6 months, it's 6 months to 12 months, it's 4.5%. If you do it for 12 months, let's say 1 year to 2 years, it's like 5.5%, and anything above 2 years, let's say 2 years to 3 years, was 6.5%. So you did it for 2 years at the rate of 6.5%. But after 9 months, now you realize that it's no more worth it because the interest rates have really shot up. So you decide to break that FD. But remember that when you're breaking the FD after 9 months, you're not going to get that 6.5% rate of interest for that 9 months tenure. You're going to get that 4.5% rate of interest because you're breaking the FD in 9 months, which lies in a slab of 6 months to 12 months slab. So the bank will assume that you did the FD for a 6 month to 12 month slab because you're breaking it after 9 months, and that slab had an interest rate of just 4.5%. So you straight away lost 2%. Instead of getting 6.5%, you're now getting 4.5%. That's the first immediate loss that you will have. A lot of people don't understand this point. They feel that, okay, for this 9 months tenure, I'll get my 6.5% and then I'll move the money to a 7.5% FD. It doesn't work like that. Banks are not foolish. They understand all these nuances. They understand that the interest rates are cyclic. They'll keep moving up and down, and people will try to be smart, but they are smarter, of course. So remember, 2% approximately in this example is straight away lost because you didn't fulfill the tenure. Okay. Over and above that, banks also will lay penalty. Most of the banks will lay penalty on breaking the fixed deposits in a premature manner. Okay. And the penalties can vary. It can vary from 1%, 2%. I mean, it can be anything. So what you have to do to find out is either call your banker to find out what would be the penalty, or you try to break or liquidate the FD online, but don't actually break it. When you try breaking it, you will be shown on the net banking screen how much penalty you will have to pay and how much money will actually get credited to your bank account. So that will give you a fair idea. Roughly, it's like 1.5% of your money is lost just because you are trying to break an FD. So overall, you lose roughly 2%. In this example, you roughly 2% on a premature withdrawal because your tenure came under a different band now. Instead of 2 years, it came under 6 to 12 month period, and there the interest rates were very low. Second, there's a penalty which banks will associate, which will further lead to losses of anywhere between 1% to 2%. So roughly, I would say, as a thumb rule, it does not make sense to break an FD just because of interest rate movement, okay? Unless I generally adopt this thumb rule, unless the difference in the two fixed deposit interest rates is like 2.5 or 3%. Okay, so if your existing FD is running at, let's say, 5% rate of interest, and the new FD that you want to do is available at 8% rate of interest, that's what might make a case for you. And I mean, in that case also, you will need to do fair bit of calculations to really understand whether it's still worthy of really breaking the FD and getting into a new FD. Otherwise, generally you will get into a loss making transaction. So my advice, generally it makes no sense to break an FD in spite of the fact that higher interest rates are available. Thank you. Bye bye.